So I'm going to give you an overview of what's going on in the water market at the moment from where we sit. So I'll do a bit of about us and then an overview on the market that you're in this region. Talk about the temporary water market, the permanent water market, a little bit about the outlook, and then some product options, you know, if you're looking at water security. So Ruralco Holdings is the overarching company for Ruralco Water and a number of other companies. Our business is about providing services and goods to farmers nationally. That's what we do. These are the areas where we offer service and other things. So Ruralco Water's in the water business. We've got 15 offices around the basin and also one up there in Brisbane, and that's supplying services to Bundaberg and Bowen and the irrigation areas further up. But most of our operations are down around here in the southern Murray-Darling Basin, which is the Goulburn, the Murray, the Murrumbidgee essentially, and then the sort of other regulated streams. We also trade groundwater, and we get involved with unregulated water as well. We're also involved in consultation to the marketplace, so we get into that. We operate a live online exchange, which is open for people to do their own trading if they want, 24/7. So you just register as a customer and in you go. It's freely available, so if you want to at any time look at what we're doing and what the value is of either temporary water or permanent water, go to the website, it's all there. You don't have to even register. The water group that Ruralco Water is part of also does irrigation infrastructure and maintenance services through assorted companies across the country, some of which Total Ends in Shep, so some of them are local. So onto the market that you're in. A lot of times we get asked about, you know, the common question at the moment is, why is temporary water so expensive? We've got good allocations in the Goulburn, and we've got at 96%, we've got 100% in the Murray. Why is the price where it is? The answer to the question is that you're actually not in a little market in Northern Victoria. You're part of the greater southern Murray-Darling Basin market, and the shortfall is not so much in Victoria. The shortfall is these licences up in New South Wales. So the market that we operate in is across this whole region. It's got the valleys that trade within themselves, and then there's the scope to trade between valleys and between states. There are limits on trade, which are these things here, called inter-valley trade accounts. And essentially the way it works is that they have a capacity to allow a certain amount of trade into or out of the valley, and at times we hit the limit. So when there's trade able to happen in both directions, through all of those restrictions, you've got one market and one price. At other times, like we've seen this year in the Goulburn, we've had the inter-valley trade account for Goulburn get to a limit which prevented trade out of the Goulburn. We could still trade in, but because there was a lot of sellers in Goulburn, and not as many buyers, we found the Goulburn price was lower than the rest of the market. So there was a period where we had a $30, $40 a meg difference. At the moment, everything's open except for trade into the Murrumbidgee, and we pretty much have one price across the whole market. Also of consideration and of utmost importance to our market is inflows, which relates to allocations, which Andrew's already covered, but this is the, once again, southern Murray-Darling Basin, and the thing to note is that we're at 43% in our market, and that's 21% less than this time last year. So it's not new news, but yeah, it's starting to get to levels that are a bit of a concern. Got a problem here. I put this slide in. It's out of the Murray-Darling Basin Authority. Essentially, that's the inflow and outflow level line. So that's telling us across the whole basin what is the average level of all the reservoirs. And the reason it's of interest, I think, is that it shows the last 7 years, and it shows us the drawdown and inflows over that time. We're very, very close to 2016. It's the last time we were at these sorts of levels. And I guess what it says to me is that we continue to see drawdowns, but the inflows that don't get us back up. And, and in this period of time, we were very, very reliant on 16, 17, getting us back, to a position where we've got healthy storage levels. So at the moment, the Murray-Darling Basin average level is about 35%. So it's actually a little bit lower than what that's indicating. And yeah, obviously we desperately need a good recharge. So on to an overview of the temporary market. We put this slide in, we've had this for a few years now. Essentially, whenever we do a presentation, it's a representation of how price is very, very closely associated with availability of water and usage in the southern Murray-Darling Basin. The blue line is available, so that's the total amount of water that's available to the market in that year. The dark green is permanent plantations and environment. That's how much water they use. The light green is the annual crop. So what you get in dry years, such as the drought, the millennium drought, not much annual crop. The dark line sort of is fairly consistent, but not much annual crop when availability is limiting. In the wet years, where are we, 16, 17? I mean, we didn't use all the water that was available that year, and a very big annual crop. The last bar down the end there, column down the end there, is we've had that sitting there for a few years now as a representation about where we're heading in terms of plantations sort of going in and water to environment. And I guess the thing with that is, that level at about, where are we, 250 gig, where are we, over here, sorry, 3,000 gig is well above the availability of water during the millennium drought. So that will be an issue going forward for those permanent plantation guys when they're looking for water, if water gets that tight. I was asked to put together some information about the distribution of usage. The first point I'd make is it's very, very difficult to put together information on the distribution of usage. I've sort of been across a whole number of databases, and no one seems to have a total picture. AITHA is a consultant out of Melbourne who's recently got into advising the water market and water market participants about the market and where it's going. And I've just extracted this from their website. And it gives us an indication. It goes back to 16, 17, but what it tells us in a way is the livestock dairy portion seems to be reducing over time. The permanent plantation, the nuts and fruit, is consistent and growing. The other one that's growing is this line here is cotton. We've seen cotton come south into the Riverina, and so more and more we're seeing water out of New South, Murrumbidgee and Murray being used there. And this is rice. Rice comes and goes depending on the year. In some years it's big crop, other years it's minimal. I put some information down the bottom here. We got this from Rural Bank a couple of days ago. Not sure of their source, but they advised us that there's 45,000 hectares of almonds. Everybody wants to know what's going on with the almond crop in the ground at the moment in 2018. 70% of that's in Victoria. To put it in perspective, 16% of that is not mature, not bearing. The rest of it is. When almonds are at full bearing capacity, they use about 14 megs a hectare. So to give you an idea about how much water almonds are using at the moment, we've said 12 megs a hectare in northern Victoria on the 30,000 hectare crop is about 360 gigs of usage. If you look at the 5-year average usage in northern Victoria and exclude environment, exclude government, we use about 1,770 gigs. So that's about 20% of the total usage. This chart's out of the Bureau of Meteorology, and it's really just to show you that when, this year with temporary water being short and closely held, and high prices, we see less trade. So, you know, this is trade so far this year, and it's about half last year. So there's not as much temporary water being traded. We've noticed it in the market. Our supply's been very tight, and that's part of the reason why we see variability and volatility in temporary prices. Times they go rush up, and other times they drop pretty quickly. There's not much market depth. Spot prices, this is wrong. I put this together 2 days ago and it's already wrong. Since the outlooks came out last Friday, we've actually seen a drop off in price. So everything's heading down except for the Murrumbidgee, which is holding ground at the moment. As of this morning, we had water for sale at $4.70. So that's why it's wrong. It's already dropped. The fact is the drive price of these things down here. So, you know, it's obviously climate, it's rainfall, it's inflows to the reservoirs, which then have a bearing on allocations and security of supply. It's about trade restrictions, and we see the variability between prices in valleys depending on where they can trade. And it's about crop profitability, so, you know, who's got capacity to pay. In a lot of years, you know, if water's expensive, then your annual crops disappear. You know, and that has an effect of pulling the price down if the supply is there. Permanent. A few years ago, nobody could tell us who owned the water, so we had a go at putting it together ourselves. Of the 7,700 gigalitres of entitlement on issue in the southern Murray-Darling Basin, we think about 62% at the moment sits with irrigators. We think an irrigators is, the classification for us is anybody that has entitlements linked to land. Investors, loosely speaking, because it's not just investors, but that's licences that we think are non-water user. So they're people that hold entitlement, but they're not linked to land. And there's farmers in that category. 6% with water authorities and retailers, and 22% is the government environment is in that category. And this is relevant because where the water comes from and is offered to the market is very much dependent on price. And when you've got irrigators holding such a large portion of it, they're looking at revenue streams and whether we put it into growing or whether we're, you know, maybe we should be trading it. So they have a lot of influence over price generally. This is a representation of permanent values over time. It's really just to show you that there's, you know, values go up and down depending on a few things, including government policy, commodity prices. In more recent years, it's, you know, it's investment funds coming in and attracted by good returns from entitlement. It's not current. The price is somewhere up here at the moment. The Bureau, again, got this slide. It's telling us what's going on with entitlement values. What I'd point out with this is the situation with entitlement values is they're rising, and the reason for that is there's less being offered. So the market is being starved of supply. But yeah, so we're seeing this increasing. It's one of the factors anyway that we're seeing this increasing value of entitlement prices. Values-wise, in this region, we're talking 1A high. We sold 100 megs of 1A high dry the other day at 4,100. The low, so generally speaking, those markets are rising slowly. In the Murray, we've seen over 6,000 for Zone 7 high, and that's below the choke and above the choke, where, well, we've sold some, we've actually had some go today at around 5,500, 5,600, so as a wet parcel. That was wet, yep. So we're continuing to see interest in entitlements. That's coming certainly from investment circles, but surprisingly enough, it's also coming from irrigators who look at it. They're looking at it as an asset that's important for their business going forward, and they figure if they've got the capital and the overall trend is rising, let's get in now. And so we are selling some entitlements to farmers. The markets that are for entitlements that are steady, I would say, would be low reliability water shares. Where are we here? Not much is changing there. And general security, not much is changing there. And that's because there's no allocation, you know, has no effect on value. it's all about carryover capacity, you know. So we've got a good supply of that. In a lot of ways, we see farmers looking to free up a bit of capital under tight times, so they offer low for sale. The outlook. So what's going to happen going forward? These are the things to consider. Overall, we're seeing water passing to higher value crops, and so that will potentially lead to, you know, if you have a finite amount of water on issue, you're going to end up with higher allocation values. Permanent entitlements, there is less of them on offer. We are, you know, seeing less and less of those offered for sale, and therefore we're getting higher values. We expect that permanent plantations will continue to expand. Yeah, they've got very good returns coming in. So yeah, there's expansion plans still ahead for those, and they will have concerns about getting water down the track. Institutional investors owning water, there's still money rolling in, the returns are still pretty good, so they're still there and they will continue to be present in the market. They now hold very big holdings, and you know, they'll look at offer products to irrigators going forward. And from the farming side of things, farmers, we're finding you know, becoming more willing to trade water as another revenue stream. So, you know, it's high value in years like this where, you know, maybe there's failed crops, you know, it's just another way to get through. So we are seeing more trade from farmers. And we're also finding farmers that are more open to the idea that water is an input. It's something that, you know, you treat like energy, you know, electricity or fuel or chemicals. And if you think of it like that, then you look at the base value of it, and is there a way to be more efficient with its use? And that's where these sorts of products, you know, these are the things that people look at to try and get better value. Andrew's covered off on the outlooks. Because we think about the market across the whole Southern Murray-Darling Basin, I've thrown in, you know, what the outlooks are for New South Wales. They released outlook information on Friday. It was conservative in nature. Their prediction was based on, in New South Wales Murray, on the very dry inflow scenario and for the rest of this year, and extreme dry for the next year. Even with that, they said, okay, we're being very, very conservative in our view, but we intend delivering you 97%. And 97% is essentially like giving Victorian high owners 100%. That's virtually full allocation. So that's been, I guess it's been read as that's a positive for New South Wales. They also said low to zero for general security, and they're at zero this year, so no relief there at this stage. But I think people were happy to see 97% and not something less. In the Murrumbidgee, they were a bit more direct and said, you know, we're planning to deliver 95%. Once again, that's like getting 100%, and 0% for general security. Well, they had 7% this year, so there's a bit of a decrease there for them. SA, we don't know. They don't have they don't put an outlook out at this stage, so all we can go on is what's happened in the past. What they are able to allocate to Class 3 licence holders depends on what the Murray-Darling Basin gives them. So when they're at full allocation, they get 1,850 gigs. If it's tight, you know, they might get less than that. So we don't know exactly when. The last time we were these sorts of levels was 2016. In 2016, they enacted carryover, and I think the allocation was 36%, and we're expecting something similar this year. So we probably have to wait for April. They've currently got 308 gigs of deferred water sitting in Lake Dartmouth, which is available for them to supply critical human water needs, and there's 103 gigs set aside for carryover if they decide to make it available. As far as the weather goes, what Dale Gray told us was there's not enough evidence at the moment to suggest that you can read too much into it, but the Bureau predicted increased chances of above average temperatures through the period. through to July, and decreased chances of exceeding average rainfall, particularly when you sort of get out to, you know, the May to July period. But also, very much said, treat it with a pinch of salt. It's too far out to forecast accurately. Products and options. So just to finish, so when people come to us and they want to talk about water and water security and what to do, you know, we, in particular, if they're looking to buy, we go through, you know, the objective. And the objective is that you want to have water available to your farm essentially when you want it and at the lowest possible cost. And you want to be able to match your cash flow, which is very important for dairy farmers in this area. The options that are available to you, there's only 5. It's pretty straightforward. You know, you own entitlement, or you go and buy entitlement, which is sink a lot of capital in. You go to the spot market and you buy temporary water and use it, which a lot of people have been doing this year just to get by in the hope that prices would drop. And further out long term, you can utilise carryover rules and carryover capacity and acquire temporary water or hold it from allocation and hold that over into next year. You can lease entitlement if you don't have the capital. It's just renting it, like renting a house, and you get all the attributes to use. And the final thing is forward allocations, which are relatively new, a new product in the last few years, which is essentially you're buying temporary water for a known price, known volume, but for a delivery somewhere in the future. So it's a good cash flow option, you know, to get water security for next year or beyond. That's about it. Any questions? Nope. Okay. Forwards. Look, forward pricing is essentially spot price plus cost to carry over plus whatever it costs you to tie up, you know, your funds for the period of time from when you buy the water to the other end of the delivery. That's how a seller works out what it's worth. You know, so what does it cost them to set it up and get it to next year plus a premium? You know, if it's across seasons in Victoria, you've got to factor in the 5% evaporation as well. But that's essentially, it's as simple as that when people are pricing it. And I think anybody that's looking to sell a forward and wanting a lot more than that, they won't get it sold. Because otherwise you do it yourself. Yeah. So at the moment, we don't really have too many prices out. One of the reasons for that is the dramatic fall in temporary prices at the moment means that nobody's prepared to commit for forward. So you get this, you know, when we have a steady temporary market and people get a feel that, okay, this is about the range and we're prepared to take, you know, make a bit of an assessment about what it's going to be next year based on where we are now, then they'll commit. But when you get volatility in the temporary market, you don't get much going on in forwards. But they're a good product and we've sold them out to 5 years forward. So, yeah, you know, for someone that's permanent plantation and wants that level of water security, you know, almonds or viticulture or, yeah, we've sold them out that far.
So 5 years, like when would you have started doing that last year?
That was last year, yep. So look, that forward that we did, that I'm thinking of, was 2,000 megs and it was done at $200 a meg. Now, how happy is that guy this year, you know, where he's got his 2,000 megs for this year delivered at $200 a meg? That's the sort of thing, you know, where this is what investors bring to the market that no one else can provide.
You're still going to get an allocation to be able to supply it to that person.
With a forward, it's the seller's responsibility to make the water available.
That's what I'm saying.
Yeah, so he has to, if he's going to make that commitment, he has to be sure about that he's got the entitlements there, and that he's got the water, the temporary water already lined up and able to carry it over. But he's making that commitment. It's bound with a contract. Yeah.